Good afternoon, this Tuesday, November 10th. Well, what do you know? They say a blind pig finds an acorn every now and then, and the USDA, they found a bullish report for the grains day, specifically the row crop. So let's get right to it and see where they did it. Well, as we look at today's crop estimates, yield on corn last month was 78.4. Average guess running in was down a half a bushel. They were kind of hesitant. Some wanted to be more, but the average came in down a half, and she dropped 2.5 bushels to an acre. Of course, that gave us a production number, some 180 million bushels below the average guess, which is already down from last month. So we're dropping some 215 million bushels on corn. That's your standout, and it gets exciting when you get to the carryout. Soybeans last month was 51.9. They hedged themselves. They were down about 0.3 bushel. I've seen a lot of 51.7s. Came in 50.07, down 1.2 bushels from last month. And of course, our production number then dropping from 4246 down to 4170. So about 76 million bushels lower as well. So this is where it gets exciting. On the carryout, not only did they lower production, but they increased our exports and maintained ethanol. And so we're dropping almost like 465 million bushels from last month to a 1.7 billion. This is what everybody thought the 2019 crop was going to create, and corn was at 450 when we were thinking it was going to go even higher, maybe $5. So this is the standout, the carryout. If China steps in and starts importing their corn, which we'll get to that number tier 2 later on in these charts, this gets down to 160. Now keep in mind, there's no more crop reports the rest of this year. January is our next crop production number. And of course, they call that the final number, but it's not the final. Every 6 months, they toy with it to make it work for their end user numbers. So this is the big deal. And this says $4.50 minimum, maybe even more. If Brazilian weather goes haywire, that thing's going to walk some more for corn to $5. Because why? Because soybeans, they're probably going to be at $12. This right now, it's already lower than this. They're not taking into account the beans we're going to sell to China when China is kept out of the Brazilian market till February. So here we were at 290 last month. We're dropping a full 100 million bushels, and there's many were leading to that, but the average guesses were at 233. Now wheat, boring, 883 last month. Guesses were for it to decline about 5 million, decline 6 million. But corn is going to go the way of whatever the wheat's going to go the way of whatever the corn market wants to go. And the corn market, well, I think that's just going to still keep going higher. Let's go take a look at some more numbers. The only standout here was they did lower the numbers for soybeans. We're down from 52.9 on Argentina. They're already leaning into the dryness down there. Now here's the thing. The beans just start coming out of the bag to plant it. And already the USDA is saying, you know what? They're not going to produce a trendline yield crop. Something's going to be wrong here. And so this translates over into the ending stocks. Soybeans, 88.7 last month. Now we're 86.5. The corn, well, of course, that's a big move now. They even lowered Ukraine's crop. And so we're 300 down to 291. This is why corn, has this upside press momentum. Last year, at this time, we were 303.3. Down a solid 12 million metric tons, and demand is rising. Corn imports, they finally, USDA got around to moving it up from 7. We've already sold way more than this, and so they got this in place to 13 million, and they're saying China's going to take 100 million metric tons of beans. They're sticking with it, and so we have a lot of sales to make yet well into the spring. So let's move on to the corn daily chart. Well, corn daily chart, we've got a good A, B, C push up here. Closing at a breakout. We'll see if they can't fade this corn back under the 417 prior high. If we can hold in here this breakout, this should press to 450. I mean, we did buy speculatively today on the breakout when we saw this. I said, that's going to keep pushing. Well, it did to 427. Then, of course, some selling occurred late, but I see no reason why it can't keep pressing. So a high of 27, subtract 10, says we could bleed to 17 and try again another push. We just got a little exposure in there. Corn daily continuation got close to the 786 retracement, $4.30 compared to last year's high. So there could be a little, maybe that was today's high coming shy of it, but should press through. Might be a little trouble here at 430 and then press on to that 450 range. 440, 450, that's my real number, but you just got to be conscious of where 786 is, and that is at 430. Soybeans. New high, first of the month low for November, first of the month low for October. This was a failed high. And of course, that implied fast continuation. Nonetheless, go take a look. Weekly continuation chart. We've now blown well through that 1080 range. Next stop, really, 12 bucks. But beyond 12, we can still keep climbing because as you can see, soybeans, they like to move 5, 6 bucks. We've showed you this before. They like to move historically. Even here, 5 bucks. Here, 6 bucks. Here, 6 bucks. This is barely getting rolling. Add 6 bucks to 832. That gives you $14 beans. I think ultimately, if this weather continues to intensify into Argentina into January, I think January we're up here at the $14 range. Well, then that's going to have corn at $5.50, and of course that's going to have wheat, much higher than it is right now when you tie them together. Meal, soybean meal stalled out $400 today, backed off because each high here is progressively lower. The day we take out the 415 value, the 405 value, will be a big deal on the spot. But right now, I think it's bean oil wants to take over. Today, meal had the limelight, but I think meal closing higher today. If that can hold and catch tomorrow yet into Thursday, I think bean oil is a quick stop to 38. And the way the veg oil deal is out in the world, I really think ultimately into January, veg oil is going to be here up into the 40s and 50s, and that's why beans get to $14. Yes, meal will be in tow. I think the bean oil market, this here is why beans will be at 14 later on. Wheat, okay, well, nothing in the crop report for it, so corn drug us up here. We had this, possibly maybe it was a cycle high last week that came in 2 days late. Corn jumping 20 cents could probably pull this back up to 480, and then we chop around some more. We'll see. Wheat for Chicago, we put the arrow down here. Maybe the low came in 1 day early. We got this variance here, and it never did go make a new high like the Kansas did. Well, she held the moving average, didn't even go to the trend line, turned up. We'll see. Again, 20 cents up on corn will probably pull the wheat back up to the highs. Then what? Chip, chop, chop? We'll see. Could be more of that. This is Eugene Grainer with Heartland Investor Capital Management. I hope you found this useful. Thanks for watching.